So, you're new to day trading, and you have a very small amount of money in your account, and you want to grow it as quickly as possible. I get it, not everyone has $10,000 to start out with. That's why in this video, I'm going to show you how to trade with just a small starting amount of $100 and grow it efficiently into a thriving stock account. Let's dive straight into it. The very first topic we're going to talk about is how to get the most out of your risk to reward ratio. So here we have our chart. The red line is our main support. It's very strong, and price has bounced off it multiple times, making it very reliable, and will probably have similar tendencies in the future. The white line is acting as our resistance, and somewhat of a weak support. This is because you can see the price resisted off this line a couple times, and even bounced off it once, making it a weak support. The green line is our profit mark. We got this line by going on the daily time frame and finding a key level of resistance. Now that we know what all these key levels are, think to yourself what you would do. Where would you enter the trade? Where would you set your stop loss? These are all some questions you should be asking yourself. What I see a lot of beginners doing is they will do the obvious, and that is they set the entry point right above the white line and they set their stop loss below the strong support. Then of course, they set their take profit target at the strong resistance, giving them a 2.73 profit ratio. Now, as I'm saying this, you might be thinking, well, I don't see anything wrong with this strategy. The key concept this specific trader is missing is the concept of getting the most out of your risk reward ratio. This person is getting $2.73 for every dollar they risk, which isn't bad, but it could be a lot better. Let me show you how. We're going to keep the exact same support, resistance, and take profit line. The only thing we're going to add to the strategy is a little bit of patience. One of my all-time favorite quotes in trading is that trading is patient people taking money from impatient people, and it's so goddamn true. Instead of entering when the price breaks through our white resistance line, we're going to wait for a pullback to happen and bounce off our line. You might be saying to yourself, why would we wait for a pullback if we're entering at the same exact price anyways? The answer is taking advantage of your risk to reward ratio. We are not able to set our stop loss below the white line because there's not enough key points to make this a strong enough support. Sure, there's a couple, but not enough to make it a strong one. But if a pullback happens and bounces off the white line, we can now consider that line as a strong support and set our stop loss below that rather than the red line. Let me show you what I mean. So instead of entering when the price breaks through the white line, we're going to be patient and wait for a pullback to happen. We wait a bit and see a pullback occurs. This is extremely good news because one, the price respects this new level and bounces off, and two, creates a couple more key points, making this a more reliable level. Why this is important is because we can now raise our stop loss below this level. We were not able to do that before because it was not strong enough. But now that we see it's reliable, we can do so. We now have our stop loss below the white line. We are going to keep our take profit, the green line, at the exact same spot. Now, the next thing you might be asking is, alright, we moved our stop loss up. What's the big deal? The big deal is, now that we raised our stop loss up a considerable amount, instead of having a 2.86 profit ratio, we now have a 6.1 profit ratio. Almost 3 times the amount we had before. So now we're getting $6.10 for every dollar we're risking, compared to $2.86. Even though we're making the same amount of money as we were before, considering that we didn't move our take profit, we now have a way higher risk to reward ratio, which will help us out so much in the long run. I know it's a slightly confusing topic, but it's such a crucial thing to understand when you first start trading, and it'll definitely pay off throughout your trading career. The next crucial tip I want you to understand is the powerful concept of knowing how much money to risk per trade. I see all these financial gurus on YouTube or Wall Street Bets telling you ways to double or triple your account within 24 hours. While the profits may seem very glorious and heavenly, profit percentage is not everything. It's all about the amount of successful, quality trades you make. So Trader 1 is the YouTube guru that I was talking about before. We gave them a starting balance of $100. They have a profit target of 20% per trade, which is one, not only risky, but you're gonna find way less trades like that per month. So in this example, I have them taking 6 trades per month. So this is saying if all 6 of these trades were successful, which I'm not even including any risk, and even finding 6 trades a month with 20% profit is pretty hard, but we'll give them the benefit of the doubt. This specific trader would have made $298. Then we have Trader 2. We also gave them $100, but we're setting their profit target at 2%. This is not only way less risky, but this trader will be able to complete a lot more trades. So this trader was able to find 150 successful trades per month because the profit target was so much lower and doable. Even though Trader 2's profit ratio was 10 times lower, they still made $1,950. The key concept I want you to take away from this is you shouldn't be worried about how high your profit percentage is. You should be worried about consistency and the amount of successful trades you can accomplish. My third and final concept I want to share with you guys to help you grow a small stock account has to do with risk. Let me explain. So going back to the trader who risked 20% of their account per trade, even though they would make 20% if they won, they're still risking 20% if they lost. If you're risking high percentages per trade, you're better off going to a casino and gambling, because that's basically what you're doing. If you truly want to grow your account, you have to aim for longevity and consistent profits. The reason trading with high risk is a problem is because of consecutive losses. I don't care how good your trading strategy is, every strategy is going to have consecutive losses. If you have 5 to 7 losses in a row and you're risking 20% per trade, your portfolio is going to go down the gutter quick. This is exactly why it's recommended that you risk 1 to 2% per trade. Let me show you why. This is a trading simulator. So in this example, we're going to start with $1,000, have a win probability of 60%, have 2 wins for every loss, take 500 trades, and finally, we're going to risk 20% per trade. The key stat we're looking at is the biggest max drawdown. If you take a look at this, if we were to risk 20% per trade, we have the potential to lose 90.4% of our portfolio gone, which is absolutely crazy. Could you handle a 90.4% drop in your portfolio? And that's just with 20%. Let's see what 50% looks like. Now take a look at the drawdown. 100%. And the average is 99.7. But take a look at if we just risked 2% per trade. The biggest amount we could lose is 15.5% of our account. Now, if you want to double or triple your account within a week, you're not going to get there trading 1 to 2%, or even 10%. You have to risk a lot to get high returns like that. I realize that not everyone has the same risk tolerance. Some of you may have a higher risk tolerance than others. Some of you may have more money to risk. That's okay. But if you truly want to grow your account efficiently, are in the trading game to make consistent profits, and are in it for the long haul, it has been statistically proven that trading with 1 to 2% of your account is the best way to do that. If you're only risking 1 to 2%, you can handle a lot more consecutive losses compared to 20 or 50%, which if you're trading for the long term, you're gonna have a period of time where you're gonna get 5 to 9 bad trades in a row. When I'm trading, I want the math to work with me, not against me. That's exactly why I and many others use the 1 to 2% trading strategy. I just showed you 3 different tips to help you grow a small trading account. All I ask in return is if you take 2 seconds out of your day and like this video. If you want to grow a small trading account, you're going to need a good trading strategy. Well, good thing for you, I made a video where I show you an insanely profitable trading strategy that is proven to work. Go check that out. Thanks for watching.